You're watching Business Incorporated live on Channels Television. Coming up on the program, Nigeria's stock market hit 68,000 for the first time in its history as it becomes Africa's second best performing bourse in Q2. Egyptian government hedges up to 35% of its petroleum needs for the current fiscal year amid risk of rising global oil prices. Banks listed on Nairobi Stock Exchange post record $627 million of bad doubtful loans in 6 months. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at what's happening with the market. And yes, talking about the second best performing stock market right here on the African continent, there we see the NGX still in the green, 68,000 points, 0.80%, not looking bad at all today. We see the South African index there, not on the top three from the information we have there, 75,519 points. Up about 1%, 0.98. Other markets we track there. North Africa, NGX 30 is up 0.96%. And we see Kenya, all-share index below that 100-point level, down big, 1.10%. Let's take a look at what's happening in the Middle East now. Middle Eastern markets not looking so bad. Intraday today, we see, but it's red all the way right here in 0.41% and 0.87%. That's what we have. And in the UAE at intraday today, 9,746 points for the Abu Dhabi index. Let's look at the other markets we track right there. Saudi Arabia also in the red, 0.17%, 0.45% down for the Qatari index. Let's see if this can flip before the close of trade right there in the Middle East. We'll definitely be looking out for all of that. Let's move on to Europe now. We'll see this week kicks off the International Motor Show in Munich, Germany. While the country was long known as one of the homes of automobile manufacturing, big German car makers could soon be undercut by Chinese competition in the electric vehicle market. For more now, let me have Cassandra Sunt joins us now. Cassandra, it sounds like Chinese electric vehicle makers are intending to make a splash at this year's Munich mobility show. What's on the docket?
Hi, Lottie. Thanks for having me. Well, it's expected that cheaper Chinese automakers are going to go on the offensive this year in Munich. And these aren't small players we're talking about here. They're just relatively new to the European or German markets. One example is BYD. They're looking to make headway onto European roads via their battery electric vehicles or BEVs. Those have been so successful domestically that last year BYD toppled German car maker VW as the market sales leader within China. Now, BYD is expected to showcase 6 of its models at the International Motor Show, or in German, those initials are the IAA. Now, currently, China-made EVs are still pretty rare on German roads. So far, BYD has sold fewer than 1,500 cars in Germany. Compare that to the 207,000 EVs sold by Volkswagen in Germany. But experts say there is precedence for BYD and other Chinese electric vehicle makers to win customers in Europe for one simple reason: these cars are cheaper. This story is very similar to what happened in the 1980s and 1990s. Car makers from Japan and South Korea were really underestimated at first, but over time steadily increased their market share through lower prices and better quality. The question here will be whether German automakers have learned their lesson from decades past.
Cassandra, ahead of the mobility show, the CEO of Mercedes-Benz said there's going to be intense competition for EV customers. What do you have to say?
That's right. Ola Källenius underlined that competition for customers will be critical, but added that costs are expected to be higher for electric cars in the foreseeable future. He described this balance that companies will have to strike in order to stay profitable. Källenius emphasized that in the face of increased competition, that it's important for his company to remain a leader. He seemed to acknowledge that this is a period of fundamental transformation in the industry, and it's not unusual for new players to make inroads, but Källenius did suggest that the vehicles that are making the most headway at the moment are in the, quote, entry-level markets, adding that it would be naive to think that they can also try to attract a premium segment. Now, Kalanius added that there is, quote, nothing you can do other than focusing on your customer. But I should note that we are starting to see movement in that direction from German automakers as well. Volkswagen announced today that it is planning to launch more affordable electric cars in 2025, priced under 25,000 euros.
Yeah, big competition, the EV market right there. But what are we expecting in markets today?
European shares were up on today's opening. They're echoing an upbeat mood in Asia as investors show signs of optimism following a series of stimulus measures in China. The pan-European stock 600 rose 0.6%. That follows a 3-session losing streak. The London FTSE 100 gained 0.6%. The Frankfurt DAX grew 0.4%, and the Paris CAC 40 advanced 0.5 point. And a heads up for those planning on looking out for Wall Street movement today, the U.S. markets will be closed today for the Labor Day holiday.
Right, U.S. markets closed today. Thank you so much, Cassandra Sun, right there in Berlin. Let's head on to the U.K. now. See, we have Juliana right there, still about the cost of living crisis right there. Great to have you, Juliana. So drivers were hit by one of the biggest fuel price hikes in decades. That's in August, according to data from RAC there. How's this been digested over there?
Yeah, good afternoon, Laddie. We have heard from RAC, which is a motoring group in the UK. They have been listening and observing what's been happening in the petrol pumps over the past couple of days. And they're quite right. Petrol and diesel has been rising to quite staggering highs, actually. The cost of unleaded rose by 7 pence per litre. Diesel rose by about 8 pence. That does sound quite small, but it is quite a lot when you add it all up, particularly as we are going through a pretty bruising cost of living crisis. This has all got to do with Brent crude oil. A barrel of Brent crude has been hovering above about $80 per barrel for the past 6 weeks. And of course, this is because of OPEC cuts. It has taken quite a long time to trickle down to drivers, but alas, that was the case over the weekend. So we've been hearing drivers on the airwaves moaning at the moment, looking at a solution. So what the RAC have put in place is some sort of pump watch app. Yes, a pump watch app. So if you are watching from the UK, you can download this app and it gives you real-time advice on where you can go across your area so you can make sure you can get the cheapest diesel or petrol when you need it. Typically, I think a lot of people go to the grocery stores, so the big 4 grocers in the UK, Asda, Sainsbury's, Morrison's and Tesco. If they do have a petrol pump in their supermarket, then it's much cheaper there. But yes, petrol prices are pretty high, not great when we're already struggling with sky-high bills.
Exactly, and that's why I am not bullish on oil prices right now. I don't want them to stay bullish at this point because of the pump price. But we have other news now. We see Tata Steel and the UK government in talks for about £500 million funding for the UK plant. What are you hearing about this?
Yeah, interesting story, actually, especially as G20 is just kicking off in New Delhi. India, this is the first time in history that they're hosting the G20. Tata Steel, a massive Indian firm. I do believe lots of governments that are attending will be having significant closed-door meetings with them, including Prime Minister Rishi Sunak, who will, of course, be in New Delhi later in the week. But just preceding that, over the weekend, Sky News reported that Tata Steel are going to be getting a massive piece of funding from the British government in the tune of £500 million. Do they really need the money? Not really, but it's essential that we can maintain our manufacturing sector. In fact, Britain is one of, or at least within, the top 10 manufacturers in the world, but we've kind of struggled after the pandemic. But Tata Steel employ a lot of people in the manufacturing sector. In fact, they're kind kind of flagship factory in Port Talbot, I believe hires about 4,000 staff. They have been back and forth with the government, Tata, about the transition into being cleaner and greener. And I believe, according to the report from Sky News, the Chancellor is very close to signing off this £500 million fund, which is going to assist Tata Steel in that sustainability transition, which would also help with electric vehicles, because, of course, within the next few years, it's going to be illegal for any new diesel or petrol cars to be built. Steel is a massive part of the electric vehicle and electric battery market. So, yeah, a good positive news story, possibly a little bit of spin to kind of appease Tata bosses before Rishi Sunak and Kemi Badenoch, the Trade Secretary, get in front of them in New Delhi later this week.
Right, we'll definitely keep tracking that story there. But I know U.S. markets are closed today, but in the U.K., markets are open. How are you seeing it?
Yes, US markets are closed for Labour Day. This morning on Business Morning, we were discussing the fact that Jeremy Hunt does insist that we can halve inflation before the end of the year. We are going to see a bit of an upward trend because of public sector pay negotiations. But alas, I think the blue chip market has picked up on some of those comments, which is why we're flying high at intraday. The FTSE All Share is up by more than 0.5%. The FTSE 100 up to by 0.53%, and the FTSE 250, the domestic market, Laddie, that's up by 0.30%. In the currencies market, the British pound is currently trading up against the US dollar by 0.34%. Also, the British pound is up against the euro by 0.15% and up against the Japanese yen by 0.54% at intraday, Laddie.
Right, definitely. Market not looking bad there. Thank you so much, Juliana, for the update.
Thank you.
Let's flip over to Asia now. So Asian markets, Hong Kong's Hang Seng Index led gains in the Asian region today, powered by a surge in property stocks as other Asia-Pacific markets were mixed start the week. The HSI that jumped by 2.46%. The Nikkei up 0.70%, 32,939 points. And we see Kospi there at 2,584 points, also up 0.81%. So the color is green, basically in Asia right now, looking good, quite bullish for investors right there in Asia. Let's flip over now to the global oil markets. The U.S. markets are closed today, but definitely did close in the green on Friday. For oil prices ticked up today, earlier, as the market sentiment is buoyed by positive China and U.S. economic data, as well as expectations of ongoing crude cuts from major producers. Brent is up about 17 cents at $88.72 a barrel. Definitely nearing that $90 level. US WTI crude rose 25 cents, about 0.3% to $85.80 a barrel. The sustained upward price movement comes after both contracts settled at the highest levels in more than half a year last week, breaking a 2-week losing streak. On the demand side, China's manufacturing activity unexpectedly expanded in August. That's data for Kaizen's manufacturing PMI. That's what it showed, leading to renewed optimism about the economic health of the world's largest oil importer. And now to the metals market. We see gold prices climb today towards a 1-month peak scaled in the previous session, supported by a slight pullback in the dollar and prospects that the U.S. Federal Reserve would take a pause from its interest rate hikes this year. Spot gold gained about 0.3% to $1,945 per ounce, nearing that 2,000 level again, to climbing to as high as $1,952. That was on Friday. While U.S. gold futures added 0.2% to $1,971. Traders say gold is hovering under resistance at $1,951 level in the trading conditions given the U.S. holiday. They add that the precious metal will likely be depending upon Treasury yields taking a step lower in order to make a push to $1,950 and beyond this week. Elsewhere, spot silver added 0.4% at $24.27 per ounce. Platinum was up 0.1%, and palladium, that rose 0.5% at $1,224. All right, after the break, we'll discuss the Africa stock market synergy with economic development. That's our next conversation. Do stay with us. Welcome back. Well, with Nigerian index number 2 in Africa, talking about the stock market performance, I see Ghana was holding number 1 spot during a 3-month period consisting of June, July, and August. How does all of this, translate to economic development? Joining me now is Dr. Afolabi Lowokere, Chief Economist, Analyst, Data Services and Resources, joining me via Zoom. Great to have you on the show.
Good to have you. Good afternoon, Ladi, and good afternoon, Abdul.
Fantastic. So, number 2 in Africa, that's talking about the NGX. So, with this booming stock market, is this an indicator that all is well with the Nigerian economy?
That's a big one.
I know.
Definitely, stock market should also at least reflect what is happening in the economy. But before we start connecting the two, we need to also understand the size of our markets, the composition of our markets, and how the economy has been behaving vis-a-vis what is happening in the stock market. So, if you look at the financial sector in Nigeria, for instance, that is responsible for less than 5% of Nigerian GDP. So, whatever happens there is very important as something to avoid the economy, lubricate the economy. But in terms of value added, it's not actually the biggest part of what happens in the economy, even though it's very, very important. If you look at the stock market, for instance, in terms of our capitalization ratio, yes, recently, especially when we look at valuation, we have been far better than we used to do. There was a time we were saying we were about 12% or 10% or 13% capitalization ratio. Recently, on the equity side, we are moving to about 20% capitalization ratio, but that is still relatively lower than what we have in some other markets around the world, especially if you compare us with South Africa or Malaysia or some other countries that we also want to be like. Another way we can also look at us is in terms of the kind of firms that are in the market. This is an economy that has about 20% or 22 to 28% of the GDP being contributed to the agriculture sector, and not many of those are represented on our market. We have telecommunication, which is about 10% of our GDP. Yes, we have large ones like Airtel and MTN, and that's also very good for us. But we also have an economy that is on wholesale and retail heavy, and not all of these are also on our market. So when you look at all this, we can say that our market may not adequately reflect what is really happening in the economy. But now coming to the issue of now that we are doing well, is that an indication of that the economy is doing well? It may be a signal because we can see the stock market can be an early indicator in terms of whatever is happening to the market and tell us what's likely to happen for the rest of the year. So to that extent, we can say that maybe the economy can do far better in the third and the fourth quarter by the time we start seeing the results. But so far this year, growth has been relatively weak, and we cannot really put them beside what we have seen on the stock market. But the stock market relatively is doing fine.
Right, the stock market definitely looking better at this point compared to the economy. But looking at the market at 31% up year to date, are investors truly beating inflation? In Nigeria, that's at 24.08%. And why are investors not reacting to the interest rate hikes we've had, here in Nigeria?
Okay, so if you are in a high inflationary environment, you're also looking for investment that you can use to hedge, or at least to some extent that can price in the inflation environment that you find yourself. And I think in recent time, looking at what is happening in the stock market, it kind of is able to compensate people for the high inflationary environment. As you know, the current interest rates will not be able to compensate people entirely, even though it's relatively high when we see what we have on NPR. But it's still relatively lower when you compare that to what is happening to inflation at over 24%. So there's always this tendency for investors to look for asset classes, especially in the face of liquidity, and especially in the face of weak macroeconomy, such that it may be very difficult to do some real investment, because government still has a lot to do in that area to be able to allow people to put money in real investment as against financial investment. That doesn't mean that financial investments are not very important, but real investment can make things to be more sustainable. So investors can start looking at, if my money can earn positive returns, having adjusted of inflation on the stock market, why do I have to put my money in other alternatives? So these are some of the things that probably will draw the kind of investment liquidity that we see in the market. And another thing we can also see in the market is that with the Forex adjustment, a lot of things, positive things have happened, especially to exchange gain for the firms. And many investors are thinking, wait a minute, these guys are going to declare dividend or profit in the next quarter, so why don't you invest in some of these firms? When you also look at highly inflationary environment, and you are looking at the prices of some of these stocks, some of them can be relatively cheap, especially when you look at them in dollar terms. So all these factors, liquidity, foreign exchange adjustment, people having a positive outlook on the economy, and also thinking that the stock market, some of the assets that may be undervalued, may actually make people to put a lot of money in investment in the stock market.
Right, and the dominance of local investors in market, that has since pushed the oil share index to a 15-year high. Do you think foreign investors might want to look back into this market at this time?
Definitely. There's something. I'm also going to the end of the year. I know you study this always, and always reported it. Early in the year, most times you see a lot of investors who are rebalancing their portfolio coming to the country. So I also see it to bring down to the first quarter of next year, possibly. Another thing is that domestic investors can also start saying, before the foreign investors start picking, why can't I also take advantage of what is currently happening? So that by the time foreign investors are back to the market, because many of them probably are doing some wait and see. As you know, if you are foreign investors and you are holding a local asset, devaluation is a sanction, it's a punishment to you. You rather want to be outside the country when there is devaluation so that you can come back and pick some of these assets more cheaply. So definitely they were going to come back to the market. But what is also important is the general macroeconomic environment. And I think the government is trying to work on that. We can all wish them a very big luck. If you are able to have an exchange rate that is relatively stable, not that it has to be very low, but relatively stable, and can allow for a certain level of predictability. And how do you do that? Be able to generate forex, regardless of whether you are in services, whether you are able to sell oil. I think that's what we can do in the short term, as well as whether a manufacturing company can be very competitive enough to also bring in dollars. So if you have a good macroeconomic environment and government budgets, efficiency and things like that are brought into place, in addition to what has already been done,
right,
possibly this investor will start having interest in Nigeria Bank. At that level, there's some of these gains that we currently see. The domestic investor can actually fully realize them. Otherwise, it's just like holding assets that are very highly valued.
Right. Well, we need more. We need to generate more forex at this point and stabilize that market to whet their appetite. Thank you so much. Always good to have you, Dr. Afolabi Oluwoke, Chief Economist, Analyst Data Services and Resources. Thank you.
Thank you, Paul.
All right, let's head on to North Africa now. The Egyptian government has hedged up to 35% of its petroleum needs for the current fiscal year that ends in June against the risk of rising global oil prices. According to senior government official right there in Egypt, the North African country decided to adopt the price of a barrel of oil at $80 in the budget for the current fiscal year, a 15% decline from the price of a barrel in the previous budget. According to the Minister of Petroleum and Mineral Resources, he announced that 35 new natural gas wells will be drilled during the 2024-2025 with investments exceeding $1.5 billion. And Kenya-listed banks have begun taking precaution against the grim earnings prospects triggered by a slowdown in economic activities, as a result of high cost of living, which has left most borrowers struggling to repay their loans. The tough operating environment has manifested itself mostly through a slowdown in earnings for retail banks, which depend mostly on individuals and small and medium-sized enterprises to shore up their non-funded income through increased banking transactions. The increased loan loss provisioning backed by International Monetary Fund is treated as an expense in the lender's book with an overall downward effect on earnings. All right, that's the show today, and that's all your money is performing at intraday. Definitely looking out for the close on the NGX. Thank you so much for watching. I'm Ladi Williams. Bye for now.